Good morning. Welcome back to Market Day Report. I'm Tony St. James. Let's jump into the corn market and see how we're trading. Still in the red, though. December off 2 1/4, 423 3/4, 2 or 3 cents lower, nearly 3 cents lower on the March, but 2 to 3 lower through July. What about soybeans? Soybeans have been trading in the red as well. We saw double-digit losses to start the morning, and we're still 15.5 lower on the November. That's new crop at 10.18.5. So all contracts that we're looking at right now, 15 cents or more in losses. What about the wheat market? Well, we're turning the corner. December, Chicago, 596. That's 3.5 higher. July at 639.5, 2 1/4 higher. Hard red, 2 1/4 higher on the front month, 605.5. July, 638 3/4. It's a penny 3/4 higher. And spring wheat, Minneapolis is in the red, down a penny on December at 643 1/4. Cotton market trades in New York, and it's down 181 points. It's 71.72. Interesting note on the cotton market. In the last 52 weeks, it's traded as low as 66 cents, as high as 103. So if you make planting decisions up around 103 and harvest price is around 71, you've got a problem. And Chris Swift is with Swift Trading, and that's not the right direction you want to go when you're looking at a market. And that's really what we saw, not just the cotton market, but many producers putting a crop in the ground when it was at a higher price.
Right, and a lot of those loans were adjusted to that price too, so now we're backwards quite a bit on those. You know, something I've noticed, Tony, over the last couple of weeks when we're harvesting our soybeans up north, I keep getting lower and lower yields. People say, you know, we're missing about 5-6 bushels an acre, and a lot of it is due to the drought that they had. So I'm kind of surprised that we're down a little bit on the bean market today, but more than anything, I see not much happening. We're right in the middle of harvest right now. We've got probably a little over 40-50% of our crop harvested. And then we got South America right in the middle of planting. So until we get one crop out of the ground and one crop in the ground, I think this volatility continues for another couple of weeks.
Now, what about flash sales? I mean, we get another sell overnight, and we've seen pretty solid sales on the soybean side, but yet we continue to sell off.
Yeah, and I think a lot of that is probably the meal market. We're still heavily loaded with meal, although I think it kind of broke out to the upside, sold right back off again. Bean oil started to reverse just a little bit. So I think if you look at, we're well off the lows that we've traded on in the month of September and August. So now we just kind of sit here again and go back and forth until we pick a direction. And I think probably the most primary thing will be is what the weather in South America is going to do. And that gets that crop into the ground.
Okay, hang on.
All right.
We're going into your wheelhouse. We're going to talk cattle in just a moment. We'll take a break. Come back and join us. Market Day Report continues in a moment. It's Market Day Report. All right, let's jump in, look at livestock futures trading this morning in higher territory. Live cattle, 187.72. It's up 25. December, now a dime higher at 187.12, but lower on our deferreds. And for feeders, last check, we're trading higher across the board. October up 37 at 249.22. November 7 cents higher, 249.22. And about the hogs, again, I keep coming back to the hogs because just about the time you think maybe we've topped out, we move higher. And December up 42 at 77.25. Chris Swift is with Swift Trading, and we could go anywhere there. Again, the hogs, I just think of the hogs as kind of being that fullback, if you will, that smash mouth, Big Ten type football. You know, the hogs just keep pushing along. and just about the time you think they're not going to break through, they get another first down.
Well, and they got a lot of convergence to take care of. The lean hog index is trading around 84, 83 yesterday, so we're still trading at a discount right now. I got the positive basis out there. That's going to keep hogs probably a little bit firmer there. The seasonal tendencies for them are a little bit stronger going now, and the same with cattle. Even with especially with the fat cattle, the seasonal tendency is a little bit firmer here. In the feeder cattle, it's mixed, but we're kind of preparing for what would be the next down seasonal in the feeder cattle market. Sometime around the middle of October, end of October, you start to soften a little bit. Everybody gets more into a holiday mode, and we just don't sell near as many cattle going in there, and everybody gets prepared for the January timeframe. We market as many stocker and feeder cattle in the month of January, second only to the month of July. So we really put a lot of cattle on feed. We trade a lot of cattle in preparation for coming out of winter into either spring grazing there or going on feed for our summer beef.
You know, speaking of on feed, talked to some cattle feeders earlier in the week and over the weekend, and they're back in the positive right now.
Yeah, it's amazing. When you look at the, still on the live hoof, they're still down a little bit, but when you go to the formula of it, then some of them can be profitable on there. And we got about $1, $2 higher cash last week. We traded 187 cash, so that always helps right there. And still, we're even not into the highest price feeder cattle yet, so we still got another month to go before we start chewing into what we paid back in August, which was the 261.88 for the feeder cattle index high.
Okay, Chris, I want to bring up one more screen for you and get your reaction on this one. The crude oil market. Now, we're down $3 in trade this morning, but that's been, well, uncommon here over the last week, couple of weeks or so. Have you been caught off guard by crude oil and its moves?
A little bit. So I will tell you that we've been relatively bearish crude oil. We look at the economic factors out there. We see the economy slowing down. The Fed's trying to tame inflation. And oil seemed like when it was trending, it trended lower. But then we have a Middle East crisis out there, and that's where a lot of oil is still pumped from. And because we are so poor on our energy usages here, our production, you know, we've capped everything. We won't let us drill. They don't let us want to increase our production in any way. So therefore, we become more dependent upon foreign oil again, and therefore we have to dictate those prices and include some of those outside of the U.S. factors.
And that all spells volatility into a market. And kind of going back to what we were talking about earlier, in that small business optimism index from NFIB, the uncertainty index for the small businesses at 103, that's an all-time high. The VIX this morning at 2153. Now, that's traded at the CBOE. The high for that was set back in August with the Israel-Hamas thing that was going on. It spiked at 65.73. The low's been 10.6. So we're kind of doubled the low here at this point, 2153. But it measures the future of volatility in the markets. And so we'll keep an eye on the VIX.
All right. Thank you so much.
Absolutely.
Great update, guys. Good to see you.